A few years ago, Nvidia was just another name in the chip industry. Most people didn't realize it would one day become the company powering the entire AI revolution. Fast forward to today, Nvidia's success has reshaped the tech world, and investors everywhere are asking the same question: who could be next? Because right now, there are a few companies quietly building the tools, chips, and data systems that could drive the next phase of artificial intelligence. These aren't speculative startups. They're strong, established businesses with solid fundamentals and big ambitions in the AI space. In this video, we'll take a closer look at two of them, both playing a major role in the fast-growing AI ecosystem and both showing long-term potential. For patient investors, these are not hype-driven penny stocks. These are real businesses with real revenue, powerful partnerships, and technology that could shape the next decade of artificial intelligence. Stick around, because in the next few minutes, we'll break down to companies that might just be the hidden engines behind the next AI explosion. And if you're a patient investor, this might be the moment you'll look back on and say, "I saw it coming." But first, a quick disclaimer. This is not financial advice. I'm not telling you to buy or sell anything. We're here to analyze and understand what the companies are doing, what the big picture looks like, and you can decide for yourself. All data here is pulled from reliable sources like Yahoo Finance, company filings, and recent SEC updates. Before we dive in, please take a second to hit the like button, share this with your friends, and also subscribe. Please help this video reach at least 500 likes. It really helps support the channel and allows us to keep bringing you the latest market insights. Thank you. We all know Nvidia has absolutely dominated the AI hardware conversation over the past 5 years. The company's share price has soared more than 1,187%. A vivid illustration of how powerful the AI megatrend can be. But the question many investors are asking now is this: if Nvidia has already run so far, where's the next massive upside? The answer may lie in the ecosystem, the infrastructure players supporting the AI compute wave. Let's start with Advanced Micro Devices, ticker symbol AMD. This is a name many people know, but perhaps fewer appreciate in the AI data center context. In Q2 of fiscal 2025, ended June 28th, AMD reported revenue of $7.7 billion, a 32% year-over-year increase. Gross margin stood at 50%, and the company still generated about $1 billion in free cash flow. Despite export restrictions to China, the global AI accelerator market is forecast to exceed $400 billion by 2027. And AMD is very much aiming to be one of the major players in that market. Their Instinct GPU family is key. The MI300 and MI325 accelerators are already being adopted by cloud service providers and hyperscalers. The next wave is the MI350 series, which went into volume production starting June 2025. The big one on the horizon is the MI450 series, launching in 2026, built using TSMC's 2nm process technology. Importantly, AMD has secured some major contracts. They entered into a multi-year partnership with OpenAI to deploy 6 gigawatts of Instinct GPUs, with the first gigawatt deployment slated for the second half of 2026. Another major deal involves Oracle Corporation, which will deploy 50,000 of AMD's MI450 GPUs in its cloud infrastructure beginning in the second half of 2026. On the platform front, AMD is monetizing its Helios rack-scale platform, which includes MI450 GPUs, Venice EPYC CPUs, and next-generation Pensando networking, targeting hyperscalers. Analysts project AMD's revenue to grow 28.2% year-over-year to $33 billion in fiscal 2025, and another 27% to $42 billion in fiscal 2026. Adjusted earnings per share are projected to grow 18.5% to $3.92 in fiscal 2025 and 60.3% to $6.30 in fiscal 2026. Currently, AMD is trading at about 37.5 times forward earnings. That's quite steep, but supporters argue that the high growth potential and strong revenue visibility justify the multiple. Analyst Matt Bryson of Wedbush raised his AMD price target from $190 to $270, maintaining an outperform rating. Analyst Vivek Arya of Bank of America raised his target from $250 to $300, expecting AMD to capture 7.5% of the AI accelerator market, up from his prior estimate of 3 to 4%. Here are the key takeaways for investors. AMD is making a serious push to move beyond being just a CPU and GPU provider and become a core infrastructure player in AI data centers. The company has major contract wins and strong product roadmap visibility with MI450 and Helios. However, the high valuation means expectations are already baked in, leaving less margin for error. Timing matters. The biggest revenue ramp-ups are expected in 2026 and beyond. For patient investors, there's potential. For those looking for immediate returns, the time horizon is something to keep in mind. If you're enjoying these market insights and finding them helpful, please take a moment to like this video and share it with your friends. Thank you. The next company on our list is Marvell Technology Inc. Ticker symbol MRVL. Marvell is talked about less than AMD or Nvidia, which may actually mean more opportunity if the story plays out. In Q2 of fiscal 2026, ended August 2nd, Marvell's revenue reached $2 billion, up 58% year-over-year. The key driver was its data center business, which accounted for 74% of total revenue. Adjusted earnings per share surged 123% year-over-year to 67 cents. The company also exited its automotive Ethernet business through a $2.5 billion divestiture, freeing up balance sheet flexibility. Marvell currently has 18 custom chip design programs already underway, with more than 50 additional projects in the pipeline. The lifetime potential revenue from these programs is estimated at $75 billion. On the interconnect and networking side, Marvell is heavily involved in next-generation optical connectivity, helping data centers transition from 400G to 800G and eventually to 1.6T bandwidth. Veredo OGPAM DSPs are already shipping. 1.6T DSPs are in early shipments, and they're working on 3.2T optical interconnects. These scale-up networking solutions are becoming critical for large GPU clusters that require ultra-low latency and high throughput. Analysts expect Marvell's revenue to grow 41% to $8.1 billion in fiscal 2026 and another 16.4% to $9.5 billion in fiscal 2027. Adjusted EPS is projected to grow 78.3% to $2.80 in fiscal 2026 and 20.1% to $3.40 in fiscal 2027. Marvell is currently trading at about 26.2 times forward earnings and has announced a $5 billion stock buyback program. Here's why Marvell might be the next big thing. It's a behind-the-scenes but critical infrastructure play, providing the chips and connectivity that support AI data centers rather than the flashy GPUs themselves. As hyperscalers and cloud providers race to support more AI compute, demand for interconnect and custom silicon could scale dramatically. and Marvell has exposure to both areas. Valuation is relatively modest compared to peers, offering more upside if execution goes as planned. But the risks are real. The business depends heavily on large hyperscaler contracts, and delays from a single major customer could have ripple effects. So, could these be the next NVIDIA? Both AMD and Marvell are playing in the AI infrastructure ecosystem, enabling the compute boom rather than simply riding the hype. They have strong roadmaps, meaningful contract visibility, and massive addressable markets. But NVIDIA's rise was rapid and exceptional. These companies may require years of steady execution and patient holding. AMD already trades at a lofty multiple, while Marvell offers more valuation headroom, but also more risk. The major growth ramps are expected in 2026 and beyond, making this a story for long-term investors rather than those looking for quick gains. Here's the bottom line. If you're a patient investor who believes the AI infrastructure wave is far from over, both AMD and Marvell deserve serious attention. Neither is guaranteed to be the next NVIDIA, but both are positioning themselves in critical roles that could see substantial growth over time. Thanks for sticking with me through this analysis. If you found this video helpful or eye-opening, please like, share, and subscribe to the channel for more content like this. Hit the notification bell so you don't miss future updates. And if there's another company you think could be the next NVIDIA, drop your thoughts in the comments below. I'd love to hear your take. Once again, this is for informational purposes only, not financial advice. Always do your own research and consider your own risk tolerance. Until next time. Thanks for watching.